Welcome back. It's time now to take a look at the top business stories. UAE Central Bank urges banks to reduce fees. UAE private business activity jumps to an 18-month high in January. And Pan-Arab GCC index to be introduced. Both the GCC and UAE markets ended mixed today. The DFM was down 0.9% to close at the 1,581 mark. In the property sector, EMA properties lost 1% and Arab tech fell by under 1.25%. Dubai Islamic Bank dropped nearly 1%, while Emirates MBD rose 2%. DU gained 0.3%. 90 million shares were traded, valued at 128 million dirhams. And over in the capital, the ADX gained nearly 1% to close at 2,647 points. Abu Dhabi Commercial Bank gained 2.75%, while Abu Dhabi Islamic Bank was up nearly 0.75%. In the property sector, Alder Properties rose by 2.3%, and Sura Real Estate dropped nearly 0.75%. Dana Gas lost 1.5%, and Taka fell over 2.75%. 52 million shares were traded, valued at 83 million dirhams. The Gulf markets ended mixed today. Let's take a look at those numbers, starting off with the UAE's two stock indices. Coming up now, let's take a look at various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. About the markets this week, we're now joined by financial analyst Bruce Powers. Good to have you on the show, Bruce.
Good to be back.
We had markets doing a roller coaster ride this week, but at the end of the week, Wednesday, Thursday, today, we saw losses reversing. Have investors calmed down now, given the situation in Egypt?
Well, it's typical when we have a sharp market reaction in a very short period of time that we have a swing back in the other direction. So that's what we're now seeing in the UAE, Saudi Arabia, and other regional markets. Abu Dhabi and Dubai are both heading back up towards resistance, and if those resistance levels hold, which I think they will, we'll have another move down. But I would expect volatility to be much lower than we saw earlier in the week.
World equity markets have climbed. I have to look at that number. It's quite a large number, $53 trillion this week. And then reaching the level we had in 2008. 2008, we remember Lehman Brothers collapsed. Mm-hmm. Is it now business as usual again?
Well, I wouldn't say it's business as usual. You're right. Many of the international equity markets have gotten back up to pre-crisis levels. However, we still have a lot of risk of spreading civil unrest, the European debt crisis. We still have high unemployment in the U.S. and growing concerns that the municipal debt market in the U.S. is going to get worse. So we need to keep an eye on those issues.
We saw gold climbing, food prices climbing this week, oil, that all puts pressure on inflation. What is the inflation situation here in the UAE?
Well, it's not as bad as we're seeing in other parts of the world. Asia is a little bit higher than Europe and the United States. Here in the UAE, last year, inflation actually declined to 0.9%. So it's not yet a concern here, but I think we have to keep a close eye on the price of food. Since we're an isolated, the UAE is somewhat isolated, everything has to be imported. So since food is going up everywhere in the world, it's very likely when we do start to see more inflation, that food is an area that we'll see it in first.
Thank you very much, Bruce. Have a good week.
Thank you.
And now to our top stories. The UAE Central Bank is set to introduce new regulations to monitor fees and commissions charged by banks. Governor Sultan Al Suwaidi said in a meeting that there had been a significant rise in fees and commissions charged by banks and that these were not acceptable. The number of complaints surrounding these costs has risen. The governor urged banks to rationalize their fees or face an intervention and to expect a new set of regulations on those costs in the near future. Banks have recently turned to increasing their fees as compensation as banks cut down on lending due to the difficult financial years of the past. UAE private businesses activity jumped to an 18-month high last month due to an increase in new orders and output. The HSBC's Purchasing Managers Index rose to a peak of 54.2 points in January, up from 53 the month before. This indicates a strong start to the new year for the country's private sector and comes as a boost to the job market. Expansion in new orders, business activity, employment and purchasing all accelerated, according to HSBC. The PMI index surveyed over 400 private sector companies with 30% of firms raising output in January. Financial management company Russell Investment is looking to launch a pan-Arab stock index as a new emerging market benchmark, which could include the 6 GCC countries. Experts believe including the MENA region will help attract international private as well as institutional investors, make the Gulf region more recognized, boost liquidity and volumes, and make the Gulf markets easier accessible. The region-wide index would rival the well-established MSCI Emerging Market Index, which already tracks some Gulf emerging markets, such as Egypt, but does not, for instance, include the UAE. And in our fast financial news, property developer Nakheel has cancelled the development of Trump International Hotel and Tower. The developer is now looking to build a shopping mall in place of the project on the trunk of the Palm Jumeirah in Dubai, as there was no market demand for hotel and real estate projects now. The Jumeirah Group has revealed that its hotel room rates have returned to 2007 pre-crisis levels. The company accounts this to the recovery of the world economy, along with a boost of tourists traveling to Dubai, especially from the UK, Germany, Russia and China. During the worst of the downturn, the hotel group's room rates fell by 25%. Well, that's it from the business desk. You can contact us at news@city7tv.com. Up next, Laura Buckwell is back with the news.